Good morning from Los Angeles. Welcome to Trading with Sergio. Every Monday and Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. Well, welcome to the biggest casino on the planet. What's happening? We all know what's happening. It just happened to coincide with my live stream today, so I'm going to extend it through Jay Powell's news conference. But at 11 a.m., the decision will come out. The news reading algos will immediately read and interpret their language. I think more importantly than what they do, which is, my guess is a quarter point cut. What they say, what the dot plots do is going to be important. Are they going to say there is 2 more cuts coming this year or only 1 more? If it's 1 more, it may be negative, construed negatively at the market because of where we are. We're at all-time highs. It was selling off a little bit today, but nothing important. And what they say for 2026. But the dot plots are going to show that, how many more cuts are coming, and where they're going to take the Fed funds rate. More importantly, why they're cutting the rates when all asset classes are at all-time highs, because I have never seen this in my 30-plus year career. Usually Fed cuts rates when things are in trouble, when the economy is in trouble. There are signs of the economy being in trouble, obviously. So if you go to the Federal Reserve Economic Data website, it's free. They put out more information than you care about, from credit card defaults to car loan defaults to mortgage defaults. They've been trending up. The other thing that's trending up that's not jibing with the Fed's mandate, which is 2% inflation and full employment, is unemployment's going up, ticking up. So are they cutting rates because the economy is slowing down? Are they seeing trouble ahead? I don't think the market has priced in that part of it. I mean, we're at all-time highs. A lot of people are looking at this that I read on Twitter and wherever else. They're thinking the Meltup is due. One of them is Tom Lee. He thinks it's going to be very positive for crypto, Bitcoin and Ethereum specifically. Is it? Well, we're going to find out. So after the initial reaction, which will be wild, we'll watch it on my trading screen. Things will settle down, and I don't think today is going to be the big day. I think all the big money players will decide which way to take this after they absorb the guidance. And tomorrow is going to be an important day, obviously, the next day after the rate cut decision. And more importantly, we have option OPEX coming up on Friday. I think it's quad witching, and those tend to be more volatile. Before then, I'll go through my positions. I have hedges on. I don't want to get hit with something, but I'm literally, I have decent sized positions on, but they're very equity efficient, and they're more geared towards Ethereum and Bitcoin, treasury asset companies. I have some other small position in another company, but I pretty much am about 85% cash. So I have a lot of dry powder. I don't want to react to what the Fed is going to do, but then we have a saying that's been stand true for decades, literally since the Fed has been around. Don't fight the Fed, right? So all the statistics say that whatever happens short term is meaningless, because in 12 months, once the Fed is into a rate cutting cycle, the market's always higher, always been higher, never been lower. So just got to go with probabilities. So in 12 months, market will be higher, should be higher. What happens between now and then is a different story. I really don't pay too much attention to short-term fluctuations. I'm not a day trader. I'm a swing trader, position trader. In my portfolio, long-term trading account, long-term portfolio, I did some changes, which I'll talk to you guys about. Took some profits, rotated into some other stuff, but so we're going to go all through it together. I will lift my hedges if we take a dump, and then we'll see what happens. But again, short term, nobody knows. I mean, if anybody says they know, they don't know. I'm not going to get pushed and pulled with what they do. Let the dust settle, just like any decent trader would do. Absorb the news. Actually, I'll play Jay Powell's news conference live, which I think usually starts about 11:10 or 11:15 after the decision is out. But then those don't end up anywhere because whatever the news release is going to be released at 11 a.m. And as you know, as I know, there's news reading algos these days. They can read the whole thing, absorb it, make sense of it with AI, obviously, before I can read a sentence of it. So, and then they'll trade. So good morning, everyone. Oh, John, good morning. There we go. I got a new member. Okay, John, email me, please. Sergio@sergioavedian.com. I will send you the Telegram chat group link. I have a Telegram chat group link for my members. I'm not doing YouTube to make YouTube dollars. It's just there's no money in YouTube. I do run a massive other channel, and I know what YouTube is about. But I do have a YouTube manager here. I got to pay him and do some stuff, support the channel by becoming a member. And you will learn a lot if you do become a member. Just click join. It's on the channel. Go to then email me, Sergio@sergioavedian.com. I will email you the Telegram chat group link. So what do members get? In fact, today at 4:30 p.m. Pacific, they're going to get a live stream. I do weekly members only live streams at 4:30 p.m. Pacific. Then they get my live trades. As soon as I execute, I post them. Again, none of this is trading, financial, or investment advice. What I do is very risky. It works for me. It may not work for you. Do your own due diligence. Not every one of my trades is good or profitable, as they should be. I don't think anybody's is. So if anybody says everything they do is profitable, run the other direction. Look, ultimately, we all want to make money. So, John, email me, Sergio@sergioavedian.com. I'll send you the Telegram chat group link. Welcome to the group. You will learn a lot. Maybe you're already an experienced trader, so I don't know. So with that said, let's see. Good morning. Hey, Zavan, good morning. Mr. Neo, let's go. Let's go, Mr. Neo. He has a huge position in Neo, so I'm praying to God that he gets to double digits. He's been stuck in it for a while. Luis, good morning. SJ, good morning. Traveler, good morning. Thank you, Will. I appreciate it. We'll repost the stream. Where do you buy gold? You can buy gold many different ways. You don't have to buy physical gold because then storing it is going to be a problem. Where you can buy gold is you can buy gold stocks, or you can buy gold ETF, which is GLD, or silver is SLV. Basically, you buy the ETF. It's like a stock. It represents gold. It's not hocus pocus. And GLD is the symbol. It's an ETF. I will highly recommend do that as opposed to going buying physical gold. Then you have to put it in a bank deposit box. There's many issues with that. Just buy the ETF. Okay. Mr. Gambit, good morning. I'm getting texts sent to me on some small cap stocks right now. Yeah, those don't mean anything, honestly. It all depends what the market is doing. I don't know if it's you subscribe to that service or not. There's many people who are trying to make a nickel and dime out there by service, announcements or sending buy alerts, sell alerts on texts. Those don't work. But there is a point I've spoken about this before, lower interest rates or interest rate cutting cycles help small to mid caps to a certain degree more than it does to large caps and mega caps. So the last 5 years, this whole run that we're experiencing in the indexes has been pretty much all top 10 stocks in the S&P 500. As you may know, S&P 500 is a market capitalization weighted index. and top 10 stocks that we all know, right? The Googles, Apples, Nvidias, Netflixes, Teslas. They are the leaders of S&P 500. The bottom 450 basically have not done much, and specifically the smaller cap stocks in an index like Russell 2000 have completely or totally underperformed what the mega caps have been doing. So basically the generals have been fighting this war. When I say the generals, the mega caps, right? $3-4 trillion market cap companies. And on an interest rate cutting cycle, the small to mid caps are a lot more sensitive to lower interest rates than the mega caps are, because mega caps are already sitting on hundreds of billions in cash. But small to mid cap companies do borrow a lot more, and they have to, roll those loans that probably they took out when interest rates were ZIRP, zero interest rate policy. And lower interest rates will help those companies. In turn, it will help the bottom line. So I am looking to rotate to small to mid caps. I do my own research. I figured, there are many out there. We all know. So when you say small to mid cap, is Palantir a small to mid cap? No, it's not a mega cap, but it's a large cap. So, but I'm looking for more to, let's say, in the range of $5 to $15 billion cap companies. In this day and age, those used to be mega caps 20 years ago. Now they've become small caps with good growth possibilities and whatever's sensitive to lower interest rates. So we'll see. Yeah, I mean, I'm just going to trade the index probably, which is IWM, which is the Russell 2000. So do some rotating there. Good morning, Meta Mike. So the other thing I want to talk to about until I show the positions. Oh, let me post. I would like you guys to come on and keep me company. That would be awesome, actually. Here's the link of the stream. All I ask is that you're in a quiet place with good internet reception, so we don't get cut off. As many of you want, you can come on, and then we'll have a watch party. We'll have a Fed watch party. I'm going to put out content's already ready to go out at noon today on the channel. It's going to discuss what the markets have done in previous rate cutting cycles or rate increasing cycles, rate hiking cycles. It may not be what you guys think it is. So a lot of people, because they don't have history on their back, they go, oh, we're going to melt up. I'm not sure. I really am not sure. I don't think we are. Initially, I don't think we are anyway. But again, this is a first. But there's always a first. What's the first? While gold is at an all-time high, dollar is on its ass, losing about 11 to 12% of its value. FYI, dollar is down about 11% this year, and guess what? S&P 500 is up about 11% this year. You guys see the correlation there? So basically, you're losing 11% of your buying power on the dollar, and then you're gaining it by being invested. That's why I created this channel. Look, the rich have figured this out long time ago, right? What do? I'm a capitalist, full on, by the way. But we all must invest. We all must look for ourselves. The government's not going to be the savior. Your parents not going to be the savior. You need to learn. You need to educate yourself properly to invest, to trade, whatever you want to do, because that's how you're going to keep pace with inflation. Inflation is not dead by any means. Don't believe the government. The government will gaslight you and say, oh, yeah, 2% inflation. My butt, 2% inflation. 2% doesn't even exist in their dreams. But then they put such ridiculous things in the inflation basket, the CPI measuring basket, that I'm going like, no, man, I'm just buying food. I'm buying gas. I'm paying for my insurance. I'm paying for schooling. All these things have gone up. I'm paying for my transportation. All these things have gone up 20, 30, 40% last 5 years. So the government says 2% inflation. I'm like, no, not true. So in order to keep pace with that, which I'm sure a lot of people who have regular jobs or on W-2s, their incomes have not improved by 6-7% a year, because that's what's happening. The debasing of the US dollar has been going on. Print and spend has been going on since actually 2008. it accelerated actually 2008. It really accelerated during COVID. And that's why all asset classes are where they are. They're basically keeping pace with inflation or the loss of buying power on your dollars that you have in your pocket. I talk about that all the time. That's the real picture. So one must invest. One must invest for long term. You choose to trade, do it at your own risk. Obviously, that's a different story altogether. But we all need to invest just to keep ahead of our dollars losing value. Although the $100 bill in your pocket nominally still says 100, it doesn't buy what it bought 5 years ago. It buys much less. It buys about $70 worth of goods because you have lost it while the government's saying, yeah, there's inflation is 2%. I'm like, no, it's not. But look, education is key. There's power in education, correct education, proper education. There's a lot of people out there. They're like charlatans. They're pushing their book and whatever. I'm like, I have nothing to prove. I have nothing to gain. I'm just trying to pay it forward, explain things in a clear manner that people can understand without making it too complicated. And you don't need to do much studying in this. You just need to dollar cost average and invest in an index, or if you're lucky enough, in some individual equities. Will there be downdrafts? Will there be drawdowns like April or last August with the Japanese yen carry trade crisis? I mean, of course there will. But one thing that my mentor said to me for a long, long, long time, look, I do trade, I do invest. There's two separate accounts. When I do trade, I'm not trying to kiss my sister. I'm trying to make 50-60% on my account every year, because then you have to pay short-term capital gains taxes, then you have slippage, you have commissions, whatever you left, you better be double, triple of the benchmark, which is the S&P 500. Investing is a different story. You can ride the waves up and down, obviously, but over long periods of time, if you dollar cost average into an index, you have done really, really well, right? So, because the compounding is a wonderful thing, and most people don't understand the power of compounding, and I do. I've understood it for a long time. I teach it to my kids, and that's the other thing: education, right? We need to teach our kids, man. We need to teach our kids. We need to teach our grandkids. We need to teach our nephews and nieces and brothers and sisters. We need to make sure they invest whatever they can invest. In this day and age, with democratization of investing, okay, it's so easy, it's so simple. And you just open a Robinhood account and dollar cost average into things that you don't need to study too much, such a simple index like a triple Q or SPX. Oh, Mr. Gambit is here. Hold on, let me grab his butt. John, welcome to the channel. Please email me, Sergio@sergioavedian.com. I will send you the Telegram chat group link. In fact, you joined at the right day, because I have a 4:30 p.m. members only live, which is amazing actually, because they can get to ask personal individual questions. It's more of a tutoring session than anything else. They come up with topics, and then I'll try to explain it to them. So join that as well, please. But email me for the Telegram chat group link. Mr. Gambit. Mr. Gambit.
What's up, buddy? Figured I'd come on and say hello to you. How you
How
doing?
are you, sir? How are you?
I'm good. I'm gonna ask a couple of questions too. I'm looking at some new things, man. Cause the trading game, you've been in it for a long time, and things go the way they go, and to understand it way better than I do. But the new stuff that happens, and when they create the new stuff, and it booms and bumps and makes a lot of money, I'm always interested in. Like that guy, Grant Cardone, is doing a little something with real estate and Bitcoin, creating his
Mhm.
own trying to do his own
Mhm.
thing and the
Yeah.
newfangled stuff. How do you feel about some of that stuff that's coming along like that?
I've been doing this channel. I think I opened this channel about a year ago to inform and educate in the power of investing, right? I have a good friend that I interviewed on this channel. He said something at the end of our interview that's going to stick with me for a while, and I've been passing it on to everyone I know. He said, don't slave harder, save in hard assets. Okay. So look at the hard assets. What's
Okay.
hard assets? Real estate, crypto,
Real estate,
gold.
absolutely. And I played that game. I played the real life Monopoly, man. Trust me, I know how to do that. And when the banks take over that, the only thing I learned from that is if you don't own Boardwalk and have it, ironclad out, and you trust the bank to run your
I know,
boardwalk for you, they
but
will take that boardwalk from you.
No, I get that. But what it is that the important thing to understand is that people have lost track, or people have lost interest in long-term investing, right? There's different types of
Yeah.
investing. There's
Yeah.
long-term investing, there's short-term. Short-term is more like trading. That's why I highly recommend to everyone have two separate accounts. Don't mix pleasure with business. Pleasure is trading. And in trading, when I'm trading, I'm swing trading, out today, out tomorrow, out next week, whatever, shorting, buying things that I see fit and structuring trades around it with my experience. But I'm not trying to lose, obviously, but I'm also trying to gain a lot more than the indexes themselves. But as far as a novice or people who don't have the time to trade, because it's time consuming, you need to invest. In this country, your success is going to come from your own personal investing journey. It's not going to happen by somebody giving it to you.
Right.
And to me, individual investing, even on the simplest terms, there's something called DCA, which is called dollar cost averaging. Every Monday, once a month if you want. I actually was at El Pollo Loco yesterday.
Mm.
I was talking to the cashier, who happened to be a 19-year-old young guy. He goes, "Oh, I saw you on YouTube." I'm like, "Yeah, I'm pretty sure you did." And I said, "How old are you?" He goes, "I'm 19." I go, "It's wonderful. When is your next break?" I really took time out of my day. And he goes, "It's 10 minutes." I go, "I'm going to wait for you. I'm going to instruct you or lecture you for 5 minutes." I literally waited. My food was getting cold, but I waited. And I said, "Come sit with me. You're 19, right?" So I asked him the simple question. I said, "If you invested just $100, just $100 every month, first of the month, you open a Robinhood account or any other brokerage account and put it in the same index, nothing more, no brainer, $100 a month, just a month. That comes to 25 a week. Okay. How much money will you have in 40 years?" I said. "By the time you're 59. That's outside your next W-2. You go to school, whatever you do, you may make more
Right.
money. You have a 401k, pension plan, IRA, SEP IRA, whatever it is that you have. That's all outside that. Just $100, drip, drip, drip into a little
Mm.
account." I go, "How much money will you think you'll have in 40 years?" He goes, like, he figured it out, right? So he goes, 1,200 a year times 40 years, so $80,000. He figured out some interest on it.
Mm.
So I said, "No." And his name was Dustin. So, Dustin, if you're watching, hey. And I said, "You will have $1.2 million."
So you showed them the power of compounding, and that's what I wish they taught in school. They don't teach anybody that. If somebody would have told me that, Sergio, in the 80s, I would be definitely much smarter in understanding. Don't blow your money in
You
two
will,
grand
you
in
will have
Vegas
more
on a
money.
weekend. Exactly, like 2 grand blowing in
So
Vegas, drinking
his
and partying and
eyeballs
gambling.
almost fell out of his skull. He goes, "What?" I go, "Yeah, just $100 a week for 40 years. By the time you're 59 and you're going through your top earning years and you're about to retire or enjoy yourself and vacations and
Right.
whatever, have a family, kids, you will have an extra $1.2 million." He was like floored. He goes, "Well, how do I do this?" Well, I go, "Next time I'm here, I will explain it to you." And I
Right.
will. I will go back and sit down with him and explain it to him. But now he followed me and he goes, "I'm going to watch you. I'm going to learn from you." But
Well,
I'm like,
well, I'm
"Look,
going to
man,
tell you the secret too, Sergio, is give him multiple brokerage accounts. Crypto.com, Robinhood, Coinbase. Just tell him to do $10 in each one and give it a go. Imagine having multiple accounts
yeah,
with
you
1.2, 1.7 million in it.
I agree. I agree.
Yeah.
So, but one thing, the base of all this, though, Mr. Gambit, is this. The base of all this, since 1971, when we went off the gold standard, okay, during Nixon times, where we are allowed now to create synthetic dollars,
Right.
okay,
Right.
which we did. Because before we couldn't print dollars because it had to be enough gold to
Backed up
back
by
that up,
something. Yeah.
right? So once we started creating synthetic dollars, game is on.
Right.
So
Right.
now the synthetic creation of dollars has accelerated to some nonsensical, ridiculous levels, which is actually
Right.
putting the country in jeopardy, to be honest with you.
Mhm.
Long-term financial future of our kids are in jeopardy. So, but again, I said this on this channel and I say it in private conversations all the time. I go, the rich have figured it out. The rich have figured out that They do borrow and they buy assets, hard assets. They buy real estate. Why do you think home prices are at an all-time high? Why do you think gold is at an
Yep.
all-time high? Why do you think stock market's at an all-time high?
Right.
Why do you think crypto is almost at an all-time high? These are all hard assets that you can park your money and enjoy the fruits. Don't touch it. Don't trade it.
Yep.
But long-term, you're going to save yourself from all this nonsense that we're pulling in Washington and everywhere else. So
Yep.
my thing has always been invest. You must invest. And what you said is so true. From elementary school all the way to college graduation.
Yep.
What do we teach them? Here's some plastic crack. Use it. Go spend your money. Make yourself feel better. Release some endorphins.
Go get the job and pay that high interest rate. Stay in that job. Pay
for the rest of your life. Carry
Slave
these
yourself
credit card
away.
balances.
Right. Never get ahead.
Exactly.
Just stay in
And
the
even
circle.
look, even in college, everybody comes out with $200,000 in debt, which they have to pay for the next 30 years. And the job they get is going to be probably a $25 an hour job, right?
Right.
So, but that's done on purpose, though. Look, if I was a bank, I wouldn't teach you all these things. I wouldn't tell you, oh, Serge, oh, Serge, don't carry balances. Oh, float my money, Serge, for 30 days, interest-free.
Right.
But then I'll get you used to carrying a little bit of a balance next month, a little bit more, so I can charge you 35% interest on that credit card balance.
Yep.
So that burrito you bought on last week at Chipotle is going to cost you quadruple now. So
and that's the way they play that game.
Yeah, they do it well. Well, banks are not banks because of anything
I tell
else.
everybody, Sergio, when they get to California, this is the perfect place that they show you nothing will stay the same in price here. They will jack the price up on anything and everything. And when you see that happens, how do you maintain that with a W-2 job when that price is going up and down on different things? You can't. And I tell everybody, I said, when you come here, I said, decide how you want to live and live that way, and then change up if you got to change up. You can't stay there eating that, drinking that $5 cup of coffee when you know you're not making enough to drink a $5 cup.
100%. And in fact, it's exactly what I told Dustin. I said, how many times you go to Starbucks a week? He goes, oh, me and my girlfriend, we go almost every day. I go, oh, great. I go, why don't you just cut that down to like twice a week? And say, take the $7 cup of latte that you just drank and pissed out, put that in that account for your $100 a month. Right.
Tell him do it for a year. He'll see what it is. He'll see the difference. Yeah.
Yeah. You don't have to change your lifestyle, even at his level, to start investing. It's $100 a month, man. You know what I mean?
And I think they should make that a prerequisite of every school, and somehow it should have been mandatory for every high school.
They won't do it.
And nobody wants to do that.
They won't do it. They won't do it because they want to get you used to plastic crack. As soon as you're able to, at 18 years old, they'll send you credit card offers and all that stuff. I'm not against debt, by the way. I love that. I'm not like Dave Ramsey.
That too. Me too.
I'm not like Dave Ramsey who says debt is horrible, this and that. I'm not against, but I'm against credit card debt because you're going to pay 35% interest. Even if your credit is good, you're going to pay 25% interest on your carried balance.
It's the abuse of credit cards that makes it evil for everyone, that they can jack that rate up to anything they want, like a
bank. Oh, you miss a payment.
Rate. I've done
you miss a payment.
Things with credit cards and that adjustable rate in mortgages. When you get that adjustable rate,
those days are over. I'm guilty of that as charged because I had a mortgage company. I had a mortgage company for 6 years. I did a lot of those.
And why they was offer that to people? It's like crack. Why do you say here's a teaser rate that we're going to jack up in 6 months or a year, knowing we're going to get you in a year or two? Creating
that's why we had the GFC, the housing crisis in 2008, right? I mean, I could tell. And in fact, my best friend at that time was one of the top people at Countrywide. Now, we know what happened to that, right? In fact, I was at dinner at his house, Countrywide. I remember like today, it was like $53 a share. And I said, I'm shorting Countrywide. He goes, oh, you got to be crazy. We're doing so well. I'm like, okay, cool. And Countrywide went bankrupt, and Bank of America took it over, right? So I made so much money during that downdraft because I had a mortgage company and I was doing these types of mortgages, but then we would package it and send it to Countrywide. We would package it and send it to a bank, and then they would package it.
That's what crazy. It was like somebody having a casino debt and selling it off to someone. Like somebody's at the crap table and you're going to buy everybody's bad crap hand and sell it to the big casino that's going to buy all the bad crap hands and live with the decision of that. that thing, and that's what's crazy about that. I still don't understand how some of these things work. So, Gerald, I tell you that in the world we're in, you tell yourself you're a good Christian, and the thing are not going to work out that way. But when you see it go that way, it's like, well, who does this stuff, and why don't they know this? We're all human, and nobody should be doing this to other
Well,
humans.
the people who are in the know. Like, I knew this was going to come crashing down, right? And then you take advantage of it. You short Bear Stearns, you short Lehman Brothers, and you short Countrywide, and you short all these companies. But you know what to do, and you have the education, and you have the funds to back it up and do it. G Money, no, his name was not Alan. I'm not going to give you his name, but he was out in the West, Woodland Hills area.
Everybody knows the people who
everybody knows somebody at
it
Countrywide,
was
you know.
buck wild. When I tell you, so there was so many buck. I'm telling you, I listen to bankers tell me crazy stuff. Oh, sign here. We're gonna be 7 properties. You're gonna be in charge of 7 properties, brand new houses that are gonna sell for like at least 800,000-900,000 each, and you're gonna be sitting pretty. And yeah, okay, all right, okay, let's do this. And when that thing started to tank, Sergio, it was real life monopoly. Watching it go collapse.
Yeah, I mean, a lot of people lost their homes.
And
Because
it was crazy.
It was,
and I learned that lesson.
I don't think we're going to experience that again, because the lending standards are a lot tighter, although they've gotten a little bit looser, but it was nothing like that. I remember doing loans because I know I'm going to sell the loan. I'm not going to hold it in my book. And I would do like for example, it would be like a gardener that will show up, right? All I had to do is, because there's loans that called NINA. NINA means no income, no asset, literally.
Right.
Like, you don't have to send me anything. I'm just going to put
everybody should have a home. Everybody should have this. Sign here.
Yeah, everybody should own a home. You know, Bush, remember the George Jr., Bush Jr. What a mistake. But anyway, so owning a home should be a privilege, not a right. And I would do like, let me put a mirror in front of your nose. Let me see if you're breathing. Oh, you are breathing. Okay, cool. Okay, cool. I approve. And then we do the loan. So what he would do is, like 6 months later, the house price would have gone up by 100,000. Then he would come back, and then we will do a cash out. He will take the equity out, go buy himself a Mercedes. So I'm going like, this is just going to not end well. And you know the movie Big Short, right? The movie Big Short.
It's semi happened during COVID with these dum-dums going out getting those loans and doing that. That's what was stupid about that, when the crooked people were like, oh, you're gonna give me a loan to go buy myself a new Mercedes? Like, what the frick is wrong with people? Like, what is
now
this about?
Now if you took that loan and put it into an S&P 500 or something like that, look where you would be, right? But nobody did. Everybody went on expensive vacations. They bought jewelry. They bought cars. They bought this.
I'm like, what's wrong with people? I'm like,
but that's how the economy was going, though, right? Because our whole economy today, even today, is based on consumer spending. We don't manufacture anything. We don't do shit in this country. Everything is outsourced, right? We lost the middle. We lost the middle class.
We invent the craziest things in this country, which is whether it be a loan type or some kind of little thing that you invent. They said that wasn't here last year, and it started something new, and it could be a whole new industry. And they said, we're going to hire 50 people for this job, and that wasn't even a job. And I'll tell you the thing that I tell you in the tech industry that I work, multimedia marketing is the weirdest thing. I still don't fully understand that so many people get hired for marketing and media just to go in and create and say, I'm getting $150,000 to be on this 7-man team, and we're all getting $150,000 each to be on 7. I'm like, this is a job, and that is a job now, just to literally go in and be a 7-man multimedia team to go in and create stuff. And that's the stuff that wasn't.
You know, we're good at that. We're good at that stuff. Stuff. So, man, thank you for coming on. I appreciate you always.
All right, good talking to you, my man. I tell you. Yeah.
I'm gonna go through my positions, and then I'm gonna turn on CNBC. So I don't like CNBC. I like CNBC.
I look at all of them, Sergio. Don't say don't like this. Look at CNN, Fox, and MSNBC. Look at all of them, because everybody got to digest this, and don't just get in that vacuum of one.
I don't do that. I don't get
all of them and say, look, how crazy are you today? Everybody's got a little craziness that they stir up on their channels each day, and I tell myself I don't dial up the highest level of crazy on any of those channels. And
I mean, look, I don't pay attention to. I don't watch TV anymore anyway. But then once in a while, when it's like this, I turn on CNBC. One of the things I do I turn on CNBC is because, as you know, the biggest contrary indicator works on CNBC. And
how do you feel about Cramer when he comes on and spews his stuff, though? That's what I mean.
I can't, because he blocked me.
He blocked you?
He did, yeah. I showed actually. I did a video about that. He blocked me on Twitter. I didn't say anything bad. I just said maybe I hope there was an ETF that does opposite of what you say or something, so I would have made money. It's like I didn't say anything bad. But
I
anyway,
got you.
so
All
yeah.
right, buddy.
All right. See you later, man.
Good talking to you. I take care.
Bye. Yeah, Jim Cramer did block me. I'm still blocked. I don't know why. Honestly, I don't say bad stuff on Twitter, but I could. But it's a waste of time. All right, so let's go to positions. You guys can see this. Like I said, I'm about 85% cash. So, and then after the positions, I'll turn on CNBC, and we'll just, or anybody else want to come on, grab the link. Where's the link? It's right up here. Okay. All right. What do we have? All right. So it seems like we're hanging in there in a lot of different things. So let's go. I will post these positions, by the way, every Monday, Wednesday, and Friday on the community page of the YouTube channel. But the members get it every day after the close. So what do I have? I think in the next 3 months or so, Bitcoin and Ethereum are going to be a lot higher than what it is today. So I started putting on a December, let's call it a synthetic position on MSTU, which is the 2x ETF of MSTR, the largest corporate treasury asset company on the planet. A lot of people think MSTR and Michael Saylor is Ponzi. I don't think so. I think there is value in Bitcoin. I'm not going to call it a pure inflation hedge, but there is some value there, obviously. So what did I do? I don't own the shares. I went out to December expiration. I'm short 40 of the MSTU December 5 puts. And with that money, I did this yesterday and the day before, so I did it with credit. And with that money, I turned around and bought a call debit spread. So I bought the 5 calls and sold the 10 calls. Why did I do the call debit spread instead of just pure synthetic? It's because I don't think MSTU is going to get up to 10. So 10 probably looks like the top, unless Bitcoin goes to 200,000, MSTR goes to 600, doubles from here, which we'll see what happens. So that's that. I did that with about, let me see, I sold the puts at 114. I bought the calls at 105. So that is 9-10 cent credit there, but I sold the calls at 26 cents. So I did this overall about 36 cent credit. It's really reasonably equity efficient. And if I do get assigned in December, if MSTU is below 5, I will take the MSTU shares. I will take the 5,000 shares of MSTU shares. Next one is another treasury asset company. I was in October's, now I'm rolling. I rolled them, and then it's not a full position yet, but it's going to get there depending on what happens today. I have some open orders to sell more put credit spread. So what I did on this one is totally define risk to the downside. I went out to January 2026. I sold the 15 puts. So stock is 17. So the stock symbol is SBET, SharpLink Gaming. They are the second largest Ethereum treasury company out there. I've put out many videos. You guys can go check it out on MNAV, multiple to net asset value. Is something very, very important that you must understand and you must track. So I do track it live, actually. So on SBAT, what I did is I sold a put credit spread. I'm up to 45 lots. I think I'm going to get up to 60 probably, depending on how much credit I can pull out. I'm selling the 15 puts for January, and I'm buying the 12.5 puts. That's why it's limited risk to the downside. And I'm doing this with about 125 to 130 credit. So I already know what my downside is. So SBAT could go to 0, actually, and Ethereum could go to 0. I know what my loss is up front. So since I'm doing this with about $1.25, $1.30 credit, my max loss is 2.5. The difference between the wings, 15 and 2.5, 12.5 is 2.5. Take out the credit I'm doing it with. So where are we? We're about $1.25. So my max loss in this is about $1.25, $1.30 on all the contracts I'm putting out, regardless of what SBAT is. If it's higher than 15, obviously they're going to expire worthless. So I'm getting paid to play. But on the other hand, what I did is I turned around and spent some of those credits to buy a call debit spread. Because I do think Ethereum is going to be higher too. So I want to take advantage of the appreciation of Ethereum, because this being a treasury asset company, I think we'll probably get up to 25 to 28 if Ethereum gets to 8,000 by the end of the year. And if it doesn't, I'm getting paid to play. So I do really like this position, but it's limited risk downside and all the upside. So not all the upside, but tremendous upside. So basically, this is almost a 9-to-1 trade. If Ethereum is unchanged, I will collect the premium that I'm collecting. FYI, I'm not doing this 1-for-1. For each put credit spread I'm selling, I'm buying half, or for each 2 I'm selling, I'm buying 1 call debit spread. So I still have money left over. I'm not putting any money out of pocket to do this. The next one is Semler Scientific, and it's an existing company that does some blood testing equipment, but I'm not doing it for that. This actually, I looked at they own about 5,020 Bitcoin. Just their Bitcoin valuation at the Bitcoin is 116, 117 is about 580 million. The market cap of the company is 420 million. So I'm buying actually discount the Bitcoin at a discount. They didn't do it. They didn't do it with debt like some MSTR convertibles they're doing. They did it with ATM sales, meaning at the market stock sales, and they accumulated 5,021 Bitcoin. Well, there's an existing company, although the business is useless basically at the moment. But then this is another Bitcoin, Ethereum, Bitcoin treasury asset company, as opposed to just being a blood testing equipment company. In fact, they just settled today with, I think, with the FDA or DOJ. I'm not sure because something wrong they did. But I'm not paying attention to the business, underlying business, just like MicroStrategy, right? Or Strategy is an underlying enterprise software business, but it's useless. It's worthless. They don't make any money. They haven't made any money with that business, just like this one. But this one, so if your net asset value just on your pure Bitcoin value is 580 million at the current price, and your market capitalization is only 420 million, it's like MNAV or market multiple the net asset value on that is less than 1, which is like right about 0.78, I think. I'm going to buy stuff like that all the time. The reason I did it with SBET, same thing there. MNAV used to be at a premium, which I don't think they deserve a premium, but I also don't think they deserve to be under 1. So MNAV is selling at 0.9 MNAV. So I'm buying Ethereum at a discount. There's a lot of people ask me, why aren't you just buying Bitcoin and Ethereum? I do that too. I dollar cost average into Bitcoin, physical Bitcoin every Monday. But when MNAV is under 1, and the company has no debt on their books, why wouldn't I buy I'm not buying the equity either. I'm putting on, because I don't know what's going to happen to Ethereum. I mean, Tom Lee says it's going to be 20,000. I don't know. Tom Lee's a goat. I believe him, but hey, there's markets always done things that people don't expect. I mean, Ethereum could drop to 3,000. Where's SPEC going to go? Well, it could go like $8 a share. Well, if you buy the equity, you're going to eat it. But in my case, I'm putting a defined risk downside trades. So I cannot lose more than 125, 130 on this trade, period, regardless of where SBAT is. So, but on the upside, I can make 10. That's the difference between my long call and short call on the call debit spread. And last but not least, I trimmed a little bit today. I have some orders to sell if we take a down leg here. I had put on 60 put debit spreads on UPRO, meaning I was long the 105 puts on UPRO, which is the 3x ETF of S&P 500, and I was short 95s. So I had put them on at 2. I took some profits at 210, 220. I trimmed it to 40. 40 is good. It's decent enough of a hedge for what I have on the long end. And yeah, that's where we are. That's the positions. I'm about literally like 85, 88% cash. I had some other stocks I was long. I liquidated it. I like these positions. It gives me enough time to work on it. And again, it's only about 15% of my allocated 15% to these positions of my account. And I will know when to put the gas on. If I need to short things, I will short things, but I will not react to what the Fed decision is going to be today. Or, I mean, a lot of people are making assumptions. Yeah, market's going to go down, market's going to go up, and like, I don't know what the market's going to do, man. I'll just trade what's in front of me. I'm smart enough to figure out what's going to happen, but I'm not going to guess. I'm not dumb enough to guess or assume things. So I position myself, I hedge myself to a certain point, and then we'll see where the chips may fall. Could Bitcoin go sell off after the news? Of course. Could Ethereum sell off? Yeah, but I'm hedged. Okay, if it doesn't do that, upside, I'm perfectly positioned for upside. I will add to the upside on the way up. I don't need to buy things when they go down. So I think, being 85, 88% cash is fine. There's always something to invest in and or trade in. There's 10,000 stocks, man. If you can't find something to trade every day, not every day, but every week. But I do have a watch list of about 300 names that I shuffle. I don't want to trade every single stock. I don't want to get pushed and pulled with every Twitter junky news. Oh, do this, do that. I'm like, no, man, I'll just stick to my rules. It has worked for me in the past, and it's been working for me for 30 years. I don't need to do anything else. So those are the positions, and then we can go to CNBC now. Listen to CNBC. You guys don't want to listen to CNBC, or you guys want to come on the show? You're more than welcome to do so. Okay. Sharkstero says, Apollo 99. Oh, is that a public company? I didn't even know. What is the symbol? Give me a guess. POLO. Is it? Probably is. So let's look at a couple of charts, and then we'll go to closer to 11. We'll go to CNBC and listen to the news live. Let's take a look at some charts. Let's do that. So this is the 2-minute chart of UPRO today. Not much really going on. Dead man's EKG pretty much. This is SPX. It's going to get wild, I'm pretty sure. So this is the 2-minute chart of SPX today. Long term, look, man. BMNR is up again, another 80 cents. Wow, powerful. I had the same position on. I took really decent profits last week on BMNR. So SBAT's lagging, but BMNR is at 1.4 MNAV now. I don't want to pay that premium. And I'm putting my mouth where my money is on SBAT more than anything else because they're selling an MNAV under 1. And what's happening is that the company's not buying back shares, because I mentioned that on my Telegram chat group. I go, it's under MNAV. You're buying like Ethereum is a 10% discount. Well, they should buy back shares, reduce share count, and then Ethereum per share count is going to go up, right? So that's what they did. They bought 2 million shares. They bought 1 million shares last week, and they bought 1 million shares this week. I applaud the company's management because they're not diluting at under 1 MNAV to buy more Ethereum. If your MNAV is above 1, like Strategies or BMNR is, then you do it. You sell shares at the market and then turn around and immediately buy Ethereum with it. That's one way to look at it. But under 1 MNAV, it doesn't make any sense whatsoever for anybody to dilute existing shareholders, right? So that's SPX. I mean, we'll see. We'll see the gyrations when they happen. I'm sure it'll happen at 1. I'm paying attention to what is on my buy list. AMD is on my buy list. Actually, let's go to daily charts and let's go to big charts. AMD is setting up for a nice move. So I'm going to trade the 2x ETF of AMD, which is AMDL. That's AMD daily chart going back 1 year, 1 day. I don't draw lines on my charts. I like naked charts because every line I draw creates bias. So all I do is I have a MACD, daily MACD. I'm not a huge fan because I'm not a huge fan of any indicator, just for the fact that they're all lagging indicators, right? So, but I do watch for like bullish bearish divergences. I think MACD does a pretty good job. So does RSI. So that's that. Let's see where NEO is. 726. Look at that. Come on, buddy. Come on. Let's get you to 10. Get me my sushi. I hope he gets there. Beautiful chart. The crazy one last week actually, has been open. 1060. There was a YOLOer that he said, I am buying, what did he say? How many? 6,000, 9,000, 12.5 weekly calls? I don't know. We'll see. We'll see where they get to. But I applaud all the YOLOers on Robinhood who got into open. And they all think it's going to 82. Actually, as you guys can see with the labels, I did trade open after the first initial pullback. I had put on a covered strangle on open. I had bought 10,000 shares, I think, at 250, and I sold the 2 puts, weekly 2 puts and 2.5 calls. Unfortunately, ended up at 254, and I got called away. In fact, after that, it went lower, and I was like, yeah, I'm glad I got called away. Well, look where we are now. I don't think I would have held the 10,000 shares all the way now, but I think I would have held through a double. What else is going on? A lot of crazy stuff, right? So Core Weave is something I'm watching. Circle, something I'm watching. Big news on Lyft and Uber today. Lyft is just broke out and now just going nuts. Uber's gone the other way, and actually pretty decent sell-off on Uber. So the other thing I'm watching today very closely is going to be TLT. TLT is the iShares 20+ year Treasury bond ETF, but it's an inverse indicator. So that means if TLT is going up, interest rates are going down. So interest rates actually have been kind of trending lower now, but we'll see. We'll see where this is going to end up. And this is the dollar index. This is why you guys are losing all your buying power. This is a dollar index against a basket of currency about to make a lower low. So 110 down to 96. Dollar index is down about 11.5%, 12% this year. That's why you're losing your buying power. That's why you have to invest in hard assets. And here's gold. New high after going sideways. I think it's right about 3,700 range, on its way to 4,000. Here is Bitcoin. IBIT is the BlackRock ETF, just kind of consolidating before the next leg comes in. And here is Ethereum ETF. That's just going sideways before the next leg up, it looks like to me. That's why I'm in SBET. That's why I'm in MSTU. I will press these positions. I don't think I have enough allocation. I'll probably get up to 20, 25%. And yeah, we'll see. This is MSTR. It's kind of right over it should be. Although MNAV has been getting crushed on MSTR for the last month and a half or so. From 450 down to 1.3, 1.35, I think MNAV, but still at a premium. So strategies selling ATM shares and buying more Bitcoin every weekend, pretty much. And what else am I watching? There are a couple of little names, but look, I'll just get there when the opportunity is presented to me. A lot of the quantum computing stocks have done well this week, such as IonQ. It's up another 60 cents. I mean, that stock alone this week is up 50%. We know the usual high flyers, HIMS, right? People love these stocks. Bad news yesterday about FDA looking into them. Took a little bit of a down leg. Hood, amazing company. Down a little bit today. Palantir was selling off, and Nvidia was selling off as well. Yeah, Palantir down about 5 today. It's kind of just consolidating. Nvidia, China supposedly banned their chips, down about 2.5%. Is it a top? Are they going to roll over? I don't know, man. I don't know. This is Triple Q all-time high, a little bit of a sell-off yesterday. So the other thing I have is if we're going to get a really serious down leg here, I'm just going to go buy some SQQQ shares, which is the inverse ETF of Triple Qs, or buy some calls or sell some puts. But I will definitely look into that. That'll be my next hedge, besides the UPRO put debit spread, because I don't think 40 options covers everything else that I'm long. So yeah, that's where we are. And now we'll go to listen to CNBC. Now, I'm not a huge fan, man, but hey, it is what it is. What can I do? Actually, let's do it this way. Let's go to the chart. Let's put this, make this a little smaller. Let's put the 2-minute chart up, or yeah, 2-minute 1-day chart up on SPX. SPX is going to get wild. This is SPX. And let's go listen to CNBC. Yeah.
Very, very. Before we go, what are your favorite names here in terms of stock?
I don't know if you guys can hear this or not. Maybe.
Which is an entry-level first-time buyer. We also like DR Horton on the low end.
Volume is as high as it can, so hopefully you guys can hear it.
High-end and Pulte Group as well. All right.
That he likes home builders. Okay, cool.
Very much. See how the entire Treasury curve and mortgage rates do in the last little while. Of course, we are expecting that quarter-point rate cut. We'll see if the consensus is surprised today. It's going to be
alrighty.
Here on the
Local. I like it.
Going to pick up coverage of the Fed decision right after this quick break.
Alrighty. What else is going on? Hey, John, what's up? Good morning. So I don't know how many of you are here, but if you guys are interested in coming on, talk about anything you want to talk about. Here's the link of the stream. Decision is due in 5. All right. What are you guys seeing? Can you guys give me like a heads up? Are you seeing CNBC screen and the chart? Is that what you guys are seeing? Or are you seeing my mug? No, you can't be seeing me. Now you're seeing me. Okay, cool. And then you're seeing that. Okay, so CNBC's in a commercial break. We got 4 minutes and 55 seconds to the decision. Okay, cool. Cool. And I cannot raise the CNBC volume for some reason. I think it's all the way up. But I can raise my volume that goes through my speaker, hopefully without a lag. Then you guys can listen to Jay Powell. Don't freeze on me now. Actually, you know what? I should have some extra hedges on. Not for the sell-off, maybe for the rally, just buy some hedges. I probably will do that. It's calm and cool. Okay. I want to raise. Come on, man. Okay, we got a few minutes to the Fed decision. Okay. No, I'm not paying for CNBC at all. You guys can hear that. It's okay.
All right, the moment the market, maybe you have all been waiting for, has finally arrived. It is Federal Reserve Decision Day. Markets, they could be coiled to respond.
Coiled.
Everybody, I am Brian Kelly is off.
I like him.
Just under 5 minutes away from the Fed's latest decision on interest rates. Wall Street anticipating the Fed will make its first cut of the year. 1 quarter, up 1% expected, but there's way more drama than just an interest rate cut that pretty much everybody and their mother's mother expects. We're going to get you the full storyline in moments. And with those moments to go, here's how things look. Stocks actually mostly on the rise. The Dow is up 1.5%. People don't really care about the Dow. Small caps actually up about 0.6%. They're seen as more of a beneficiary of future rate cuts.
Oh, I just said that, didn't I? IWM. IWM outperform going forward. The SPX.
What are the descents? C. And then, of course, gold, Bitcoin, the US dollar, the currency complex, gold down just a bit, but gold at a record high as well. Bitcoin on the move too. Bitcoin down about $1,000, but for Bitcoin, it's actually a relatively small move. All right, enough talk. Let's get right now to our all-star panel here, all in studio. We've got David Kelly, JP Morgan Asset Management, Francis Donald, RBC.
Not much has moved, honestly.
Morgan Stanley Investment Management. All right. Bank of Canada is down. So here, Federal Reserve US, Francis, what happens today?
Well, we get a cut from the Federal Reserve, and they're probably going to emphasize that labor market is looking worse. But I want to hear how they counteract.
Let's see how my positions move around. The spreads are going to get super duper wide in about a couple of minutes. The market makers are not going to take any chances. They're not going to let you execute. I have some sell orders on my put debit spread if we do take a leg down. And I have some buy orders on SBAT to put more put credit spreads out. In fact, we shouldn't cut today. Okay.
The reason we shouldn't cut is because the Fed is further away from its inflation objective.
Oh, yeah. Good for you, David Kelly. Be a man. Step up.
I don't think we're on the brink of a recession here. It's a slow economy. But the problem is
good for you, David Kelly. All right, this is a 2-minute chart. Let's see what kind of gyrations we get. So my guess is it will go up first and then we'll sell off. And then we'll end up exactly where we are. How about that?
Does Jay Powell have to defend cutting rates today by saying the economy's really, really weak? Because that messaging.
Oh, there we go.
But one of the things, whatever we get today, is a rate cut does not help the economy go faster at this point. Jim?
So I think they cut 25 basis points, but I don't think it's just about the economy. I also think it's about the balance sheet, and I also think it's about liquidity.
Ooh, look at that wick. Oh, look at that. Oh. They read the news already, the algos. Look at that wick. That's a mean one. And now comes the sell-off. Look at that bar, boys, girls. And now we're coming back down as usual. But we'll see. We'll see what they say.
So I agree, with David Chris, we can debate the economics around this. We can talk about the unemployment rate, but the reality is, I think that the Fed's insurance is really based on liquidity.
Francis, we've got 1 minute to go.
We don't have 1 minute. They already read the news, you dumb shit.
How much does the non-interest rate stuff matter?
Look at that. Look at that bar.
What the non-interest rate stuff is, it's what the interest rates actually do. And I'm going to pick up on David's point here. We got to be really careful. We're going to get headlines all today. The Fed's cut rates. This is not going to improve the U.S. economy very much at all. What ails the U.S. economy is not interest rate sensitive. It's a massive trade shock. It is a labor shortage. It's an uncertainty shock at play. So even though we see a Fed today, even though we're going to see lots around the sense that matters to the story of the Federal Reserve, today matters way less for the real economy than maybe the headlines will.
Here we come down now.
Before, David, I don't know what the Federal Reserve does about, auto insurance rates that are up 40% a year, electricity bills that are up 40%.
Exactly. Exactly.
The tariff both slows you down and also gives you a temperature. And that's really what's the problem here. And the Fed really isn't
Exactly.
All right, so with about 10 seconds to go, we got the Dow up 0.6%, small caps, mid cap stocks.
Let's see. Fed approves quarter-point interest rate cut. 2 more coming this year. Oh, that's trouble. 2 more coming this year. Is that going to be bullish? Are they going to melt it up? Yeah, initially anyway. Wow. Now, is the market going to think economy is in trouble? That's why they're cutting so aggressively. So, downside risk.
Unemployment has edged up and economic activity has moderated. At the same time, the statement does note that inflation has moved up and remains somewhat elevated, a period of Fed favoring the concern about employment here over the concern about inflation. It says uncertainty remains elevated as well. On the rate outlook at the so-called dot plot, some really interesting movements here. As I said, the median Fed official forecasting 2 more rate cuts this year, but just barely. There was a massive disagreements among officials on the rate outlook.
We're rallying, folks.
Very unusual with just 2 more meetings remaining. Let me give you the data here. One official doesn't want to cut at all. There was no other dissent in favor of not cutting today, but one wrote down the current rate.
Let's see what TLT is doing.
As their dot. 6-1. No more cuts.
Ooh,
this one.
big leg up on TLT. 20-year rates. What's happening to the dollar? Look at the dollar. Look at the dollar. Absolute trash can. And gold must be rallying too. Yeah, look at that bar in gold. Okay. What's happening to Bitcoin? Big move up and then not much else. ETH, Ethereum. Yeah, big volatility, but we'll settle in a minute. Oh, we're rallying. Let's see what my positions are doing. Good thing I got out of some of those hedges. I didn't expect them to cut 2 more times this year. So hedges are fine. Yeah, we rallied on SBET. We rallied on MSTU. Okay, cool. Now we'll just let the dust settle. I want to buy some AMD. Yeah, AMD turning still red. Okay. SPX keep rallying.
This was my speculation leading into this, and that's what I think it is, Brian. I think it's Stephen Myron out there
Okay, now that the dust will settle, now is the market going to think they're cutting so aggressively because they're really worried slowdown, and is the market going to price in a slowdown? Okay. Okay. Okay.
Yeah, that dot, as they say, is kind of like this Canadian reference, the yellow knife in the Northwest Territories, kind of way,
Okay.
way up.
So they cut a quarter. They're going to cut it 2 more times this year. That's more aggressive than I thought. I thought they cut it 1 more time this year. The question now is, why are they cutting rates so aggressively this year? The other question is, are they worried about, obviously they're more worried about the unemployment numbers, economy slowing down than inflation. Is this the proverbial stagflation box? Inflation is not dead. We're cutting rates now. Is it going to refuel inflation? What's the definition of stagflation? Higher inflation, right? And a slowing economy. So unemployment's ticking higher. Fed's worried. They're cutting rates. Is this going to fuel fire? I am pretty sure these talking heads on CNBC are going to mention stagflation multiple times next couple of days. And I've been talking about stagflation actually for 6 months. So there's some content on the channel, not important, but is this where we are now? And what's the cure for it if we're on a stagflationary period? I don't know a cure. If you know one, just grab the link and come on and talk to me about it. I think the cure for stagflation is if the economy is going to slow down to the point that consumer spending slows down and inflation cools off on its own. That's one way to look at it. But if we keep cutting rates, we're definitely going to refuel the fire of inflation. And we had this before in 1970s. Remember Paul Volcker, folks? And we'll see. We'll see what's going to happen. And, I will mute CNBC for a minute. And I will wait about 10 minutes for Jay Powell's news conference. We'll see. So what have we done? We pumped a little bit. Now we're selling off a little bit. Yeah. Nothing major, honestly. In my account, anyway. Not much has changed. A couple of stocks moved a little bit. Actually, SPAT moved. Let me see what Ethereum and Bitcoin are doing. Accounts pumping, says one of my members. I don't know. Your NEO keeps going up. 728. It hasn't gone up. What's pumping in your account? Let's look at Coinbase. Not much, really. 115.8 on Bitcoin and 44.86 on Ethereum. I mean, 116 about and 44.90 on ETH. I don't see much, honestly. So we'll see. We'll see what happens. And I'll wait about 5-8 minutes and then go to listen to Jay Powell's. We'll listen together. So that's it. Are we in a stagflationary period? Are we going to create more inflation because we're cutting rates aggressively now while every asset class is an all-time high? Obviously, Fed is much, much more worried about a slowing economy, and that's their job. They have to worry about it. Somebody said here, John said they took too long. They're always behind the ball. They're always behind the curve. So they did the same thing with inflation. They said inflation is transitory after they pumped $8 trillion into the economy coming out of the pandemic, and they waited too long to raise, and look what happened, right? Now we got inflation problem. We can't put the genie back in the box. We went on a hiking cycle, ZERP to 5%. Now we're cutting while the inflation is about 3%. What happened to the 2% mandate? No. Now they're paying a lot more closer attention to the economy, to the unemployment numbers. They're ugly, and the defaults are ugly, actually. If you go to Fred, if you look at credit card defaults, prime, subprime auto loan defaults, mortgage defaults, they're all ticking up. So Fed is seeing this, saying, okay, we need to lower rates. What will this help? I think it will help my thesis of small to mid caps more than mega caps, right? Anything interest rate sensitive. Banks, I'm not sure, but maybe, that gentleman said home builders, but home builders have been rallying already really, really strongly. You may have some mortgage companies, actually, like Rocket, for the fact that a lot more refinancing can be done now, so they are profitable transactions for them. But the stagflation box is real, definitely real, because if the inflation now next year, next 3 months, 6 months, because look, let's say the tariff effect is transitory, the inflation that we get from tariffs is transitory. We don't even know where those things are now. The musical chairs are still going on, but I've lost track, or actually I lost complete interest in what's happening with tariffs, to be honest with you. If that's inflationary, we're cutting rates. If that's inflationary, I mean, we know what's happening to M2 money growth, right? It just keeps accelerating. I would like to listen to, actually go back to the Federal Reserve website and look at because they have been cutting their balance sheet down. They cut it down to about 2.2 trillion so far. It peaked at the pandemic levels about 8.5 trillion. Now we're down to like 6.4 trillion. So they are cutting the balance sheet down. They're not even supposed to have a balance sheet to start with, but anyway. But M2 growth is there. It's accelerating, and global M2 growth is wild, right? So there's definitely a correlation between M2 growth, global and US M2 growth versus assets. There's really a reasonably tight correlation with a little bit of a lag, actually. So yeah, I guess party goes on, right? We'll see how the market settles today. I'm not going to do any transactions unless I see something important that's going on. And let's go back to my position screen. We'll go back to CNBC in about 5 minutes to listen to Jay Powell. What are we? Nothing really. I mean, big cloud of dust. Honestly, the book credit spread, put debit spread stayed exactly where they're at. In fact, some of the Bitcoin related stuff is selling off. I may put on a little bit more of the call debit spread. Let's go to the 2-minute charts, and there you go. There's your big wick up, big handle up. There's your big whoosh. Literally, we're exactly where we are. And I think my prediction was we're going to take a leg up, take a leg down, and then end the day up. And there you go. We're just giving up everything we took off. Look, man, don't trade these things. I mean, I'm sure a lot of day traders are going like, oh, yeah, I made so much money. I'm like, bro, what are you talking about? So that's the SPX, 2-minute chart of SPX is moving as we speak. If we weren't at all-time highs, I think this kind of rate cut news would have been really bullish. I don't think it's bullish. And I said this before, even the rate cuts happen all week this week. Big cloud of dust and nothing, but we'll see. We'll see how the market's going to interpret this. If the market interprets this, that the economy is really slowing down, that's why the Fed's cutting aggressively, we may have a sell-off in our hands, actually. So that is definitely a possibility. Yeah, Bitcoin is selling off. Ethereum is selling off. Okay, that's fine. We can handle that part. Bitcoin 115.7, Ethereum 44.77. Not that big of a deal, honestly. But I do want to put on more put credit spreads on SBAT. Where am I at on that one? I'm at $1.35 credit. In fact, I want to do more of $1.50 if we do get a whoosh down here. Let's go. Let's do another 5 lots. Keep adding. 150. I'll take 150 credit. Yes, sir. Ooh, MSTU selling off. I think we can add to the. Let's do some more of those. Yeah, we're selling off hard now. Actually, I'm going to take off the sale on the hedges. Keep the 40 hedges on. Yeah, no more hedges, lifting hedges. We'll just let that go. That'll protect the account. We are selling off hard on these SBAT and where's BMNR? SBAT selling off really hard. BMNR. Oh, look at BMNR. 57 high, 52, 53 low. We are selling off hard. Okay, there's the volatility. There's your SPX. Yeah, I think the market is going to read this a little negatively. Good thing I had the hedges on. I will add to the long side. I think it's temporary. Yeah, we're selling off hard, folks. Am I going to add anything here? Not really. Yeah, I have to put credit spreads on. Of course, they won't give it to me. Market makers widening all the bid and asks. They're a bunch of assholes. Okay, I'm going to buy more of MSTU calls. Let's buy 10 more of those at $1. Okay, we bought 97 cents. Let's see where we can sell the calls at. 25 cents, I think, is proper. 25 cents. Yeah, that's going to be my offer. That's fine. Do we sell more puts? No, we have enough of that. Yes, we have SBAT. Oh, we're selling off hard, folks. Like really hard. Okay, cool. Be cool, calm, and collected. That's why. What's my nickname? Iceman. We'll just buy some more of those. Let's see if we can get these off at 23 cents. No rush, actually, honestly. 23. Yep, we just got that off. Okay. So we did the call debit spread at 97.23.74. I'll take it. Okay, we added to that. What else we're going to add to? Now we're rallying back up. I mean, I'm, yeah, there's the S&P. That's the leg we took down. We took a really, actually, that's MSTU. This is SPX. Yeah. Yeah, I don't know if the market's going to like this, honestly, folks. Look at that sell-off that we had. Look at that. 66.25 to 65.80. That's 1%, just about. A little bit less, 0.75%. So I have the UPRO put debit spread. They didn't do anything, honestly, but then that's okay. I need to keep a balance. I definitely need to keep a balance. Actually, I want to cancel this order. Okay. Yeah, market makers are keeping everything so wide that they won't give me my put credit spreads on SBAT. I love SBAT here at this price, down to 0.88 MNAV. Are you kidding me? Give it to me. Give me all you want. What is our put debit spreads? Yeah, they're like $500 profitable. I end up keeping a little pace, but not much. Yeah, now we're rallying. We're going to be back to, I mean, we started all this, by the way, at 6,600. Then we went to 66.25. Then we sold off to 65.80. And now we're back to 65.95. So there you go. I mean, hey. Oh, J-Pal. Let's go listen to J-Pal. Let's go.
Part of the S&P. Before the decision came out, we were at roughly 6,600.
And we're back to
Right
6,600.
now, the current price, as you can see, is 65.87. So 13 points below where we were before the numbers came out. It got as high as
You spoke too soon, sir.
24 in the 2 or 3 minutes right after the announcement. So it's gone up 24 points from there and given up all those 24 points and then lost another 10 to 13. That's the current state of play. So a bit of a roller coaster as we try to figure things out. Some key parts of the market to watch. Always on a Fed day, you're watching what the banks are doing right now. So take a look at the big ones like JP Morgan, Bank of America, Citi, Morgan Stanley, Goldman Sachs, all generally still higher, but maybe losing a little bit of steam. Also check out what's happening with the home building stocks. They are holding on to most of their gains. They did spike up after the rate announcement came out, but the likes of Lennar, DR Horton, Homes, even the Home Depots and the Lowe's are in play right now. So we're seeing generally green across the screen there. The other point that you made, Brian, about the Mag 7 type stocks, large cap, mega cap technology and communication services. That's a little bit more of a mixed picture right now. Apple shares are still clean to 0.25% gain. Microsoft and Avedian lower on the day so far. And then we'll round things out with a check on gold prices, Bitcoin, and Ethereum as well. They have generally been seen as reacting to the trade picture. And by the way, each of those assets, crypto and regular gold, all lower so far right now, Brian. So we'll keep an eye on the volatility as we head towards the press conference. I'll send those back over to you.
I'm looking at the stock market reaction now. Let's get the bond market reaction in Chicago. Rich Santelli, not a huge move in the TLT today, but I would imagine you're
Pretty damn big move in the TLT, folks.
The last couple of weeks has been the anticipation of what we got
market's back to exactly where it was. That's crazy.
Let's start first with the 2-year. 2-year was around 353, up 3
Okay.
basis points on the session when the announcement hit. You can see it trading down on the intraday chart to 346. The current low yield close for the year was on the 8th of September at a 348 yield.
All right, we added to the debit spread on that. We're fine there. We're trying to add to the put credit spreads. They just won't give it to me. On SBAT. Oh, Assembler fell off. Okay. The put debit spreads are not doing anything. I'm like, Jem was right. Jem Carson, I respect him. He was like, yeah, you can buy hedges with indexes or index options, puts, but it's not going to work. FYI, the put call ratio is at its lowest level that I've seen it for the last, I don't know how many years. So be careful with that. A lot of YOLOers out there. What happened to some crazy like open? Yeah, goes from 1080 to 920. Yeah, you want volatility? There you go. You got volatility. Yep. Oh, I talked about it. And this is dollar index, folks. I mean, that thing fell out of bed. This is the 2-minute chart, but if you go daily, I think we're making it lower lows here. Yep. Yep, just lower lows just now. I mean, what do you think is going to happen? Lower dollar. We need to watch the dollar yen more importantly. More importantly, yes. Okay, let's answer some questions. What happened to MSTR? Sold off. And I wouldn't get pushed and pulled with what's happening today. Professional victim. It's sold off. Yeah. I don't know where, MSTR has been selling off, number one. MSTR, MNAV has been getting crushed, number two. So, yeah. I have a position on MSTU, though. Okay, so we're 115.5 on Bitcoin and 44.77. No big deal. Down less than 1% on both. So I'm not really concerned, honestly. And yeah, I saw lift today up 12%. In fact, it hit 27 in pre-market, Matt. They announced a deal, deal with Waymo, and more importantly, what they're doing is, Lyft has a massive flex drive business, so they manage 20,000 cars. So Waymo gave them the management of the cars, clean up, charging, and everything. I think that's a great deal for Lyft. It was as high as 27. I don't know where it was actually. Let me see. Let's see where Lyft is. Yeah, dollar index getting crushed. Oh, come on, Serge. Lyft, yeah, not even selling off, just holding its in. And Uber is absolutely getting crushed, or was getting crushed. Yeah, down 5. So where is the SPX now? Back to literally back to 6601. Holy shit. That's funny. There we go. That's where we are. So we were at 6,600 before the decision, went to 6625, came down to 6580, and we're back to 6601. Exactly where we were. Exactly. So there you go. So you want to trade this craziness? You go ahead and trade it. Not for me. And luckily I bought some stuff. See, these market makers that I deal with, I was one, so I know. I hate these people. Like, I have orders in. Fill me, man. Fill me on that pullback. Well, at least I bought 10 more call debit spreads on MSTU. They just won't do it. They just won't give it to me. Why wouldn't you give it to me, man? I had my orders sitting there for you. Screw it. Now we cancel it. We start over again. They don't even touch orders when the market gets this volatile. So whatever you want to do, you really can't do unless you have an order sitting there. And I had orders sitting there.
Think about the Russell though. 40% of the Russell is unprofitable.
Yeah.
That means that they rely on interest rates.
Yeah.
That means they rely
I just said
on
that. Didn't I say that?
That is
Russell
important.
2000, rotate.
So if you think those things are going to do better, think about tech investment. Those will do better. Consumer discretionaries, your Best Buys, your Home Depots, Ford, GM, anything.
Okay, Best Buy.
Finance will do better with
Not
lower
much.
rates, obviously.
Home Depot.
You got Richard Clare on the way. How much, like, GM's had a nice move. You know,
Okay.
again, how much of this is
TLT keeps rallying. That's impressive. Actually, now that's selling off, and SPX is rallying. What happened to Tesla and all of this? Tesla sold off pretty well. 425 to 411. Wow. Okay, and back to exactly where it was before the decision came out. So everything literally is back to exactly where it was before the decision came out, right there. Interesting. Interesting, folks. Interesting. So, yeah, what's the point of trading this? You're just gonna. That's why I don't day trade, bro. How do you come out of that alive? So fast. Yeah, whatever. Not a huge fan of day trading because your odds are literally 50-50. Flip a coin, might as well. See, they put debit spreads, didn't do anything. Stock sold off a little bit, but we're back to 5 on MSTU. I don't see anything happening, man. So my shopping list was AMD for sure, AMDL especially, 2X ETF. I will be patient on this one. SQQQ. I took a leg up. And then pulling back now. Nvidia. Yeah, down about 3%. Palantir. What is Coinbase doing? Not much. Actually down 10. ETHA is the Ethereum. I mean, it's just going sideways. I don't see anything happening. I don't know. So those YOLOs in open. Oh, no, they're back up again. Back up to green. Wow, this is wild. Wild. Good. Not much. If you guys have any interest in these stocks, let me know. I'll take a look at the chart. Should we even wait for J Powell? Yeah, we probably should. Honestly, nothing has changed in the account. We're exactly back to where we were. Seriously. The only thing I did, I add on the pullback, and that's all I did. I tried to add more. It just wouldn't work. I mean, ultimately, this is bullish, right? Lower interest rates, 3 cuts this year, more next year. I just want to see what the market says tomorrow and the next day to this aggressive cutting cycle. Is it going to price in a slowdown? Because market triple Q or SPX is definitely not pricing in a slowdown at all. Like literally none. So we're at all-time highs. Yeah, we're rallying now. We're going back to the high now. That's wild. It's all good. All good. Hey. Honestly, everything in the account before it took a whoosh down and then went back up, and we're exactly where we were. I don't know. Why should it? Why should it? I said it's not. I already said it. I said I don't think market's going to react positively to rate cuts. Market's going to now decide how to treat this. Aggressive cutting cycle is bad because the economy is really slowing down, and the market's going to price in a slowdown because market's at all-time highs. It's not pricing in anything negative. Market is the best pricing mechanism on the planet. It will always price things in. It will figure it out. And these initial gyrations are meaningless to me. I don't really pay any attention to any of that. But next day, the day after, on Friday with OPEX, I think we're going to get a little bit more volatility going. Lower interest rates are not always good for markets. In fact, I have a really good video coming out at noon today in half an hour. I already preloaded it. I'm explaining to you all what the market does during interest rate hiking cycles and what the market does during interest rate lowering cycles or cutting cycles. A lot of people are of the thing that we're going to melt up. Well, why are we cutting interest rates is the key to that question. Are we cutting interest rates because economy is going into the shithole? If it is, stocks are extremely expensive. But are we cutting rates for another reason? And then now we're in the stagflation box because lower interest rates now are going to fuel inflation back up without a question because we never killed inflation to start with. So we're getting away from the Fed mandate. Fed mandate was 2% inflation, full employment. Unemployment's ticking up. Inflation is 3% instead of 2%. Well, lower interest rates are going to refuel inflation if tariffs did not do it already. But then I gave up on tariffs. So we're going to have to find out. We're going to have to find out. We have to find out. That's what I'm saying. I'm sticking to my story. Well, Trump like interest rates. I don't know. I'm doing well. I mean, when was the last time lower interest rates helped the average folk? Because the banks raise the interest rates real fast and then cut the rates really, really slow. So tomorrow you'll get like some bank cutting the prime lending rate. Who gives a shit? Right? Are they going to cut your auto loan rates? Are they going to cut mortgages? Mortgages have been coming down, though, to be honest. And so you may start some housing activity, but then it depends on the pricing of the housing. The pricing of the housing, because of inflation or because of debasing of the currency, dollar being toilet paper, has gone up so much, unaffordable. The most unaffordable ever, housing. Are interest rates, lower interest rate, lower mortgages are going to create some more housing activity? Most likely they will. And but we'll see, you know. I'm telling you, I've been doing this for 35 years. I've never experienced lower interest rates or interest rate cutting cycle when all asset classes are at all-time highs. I've never experienced it. So this is the first for me. I'm going to learn with you guys. But my prediction is market's not going to melt up. And there he is.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum
bullshit.
Stable prices for the benefit of the American people.
Bullshit.
While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment has edged up. And downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. We also decided to continue to reduce our securities holdings.
Good.
I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending.
Now we're selling off.
Business investment in equipment and intangibles
That's crazy.
From last year's pace. Activity
Crazy.
in the sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant.
In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 0.25 percentage point to 4 to 4.25%.
Bunch of mumbo jumbo.
And to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. It's a challenging situation.
Stagflation.
When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate.
Good Lord.
With downside risk to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks.
Okay.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy.
Okay.
The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course.
Okay.
The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
Blah, blah, blah.
Everything we do is in service to our public mission, and we have to do everything we can to achieve our maximum employment and price stability goals.
Mm-hmm.
Thank you. I look forward to our discussion.
All righty. I didn't expect more than this, so it's pretty good.
Thank you. Chris Rugaber, Associated Press. As you know, Fed Governor Stephen Byron has continued, kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch time.
All right, back at the range.
Compromise the Fed's independence from day-to-day politics, and relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So
back at the ranch, boys.
Committee member today, as we always do, and the committee remains united in pursuing our dual mandate.
Okay.
We're strongly committed to.
Yeah, I agree.
And beyond that, I really don't.
Okay, so
You and other Fed officials have
let's shut this thing down.
about the impact of tariffs on inflation. Although perhaps with many companies failing to meet the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here? That tariffs are the reason we're seeing.
I listened enough. Have you guys listened enough to this BS? Okay. Okay.
It's certainly possible.
Oh, no.
We're beginning to see, we have begun to see
No.
prices showing through into higher.
Okay. So there was a comment that I completely agree with. What was that comment? No, we're selling off again. This is the comment of the day right there. And he caught up on that too. Well, to each their own. How about in your life? Is it doing it? Is your wage growth outpacing inflation that you experience every day? I don't think so. I don't think average American is experiencing that. How about this one? Wage growth outpacing inflation is the joke of the century. I agree. That's why you invest. That's why, exactly. That's why you invest. That's why you take care of yourself. That's why you don't listen to these jokers. I mean, look, I think Jay Powell has done a good job through the pandemic and steered the economy reasonably well. Late twice, but Federal Reserve was always notorious about being late because they dependent on data that's backwards looking. As we know, what happened with the BLS numbers, right? Bureau labor statistics, the revisions on unemployment and things like that. Look, man, you got to read the tea leaves better than this, right? And you have to have an independent mind. You have to listen to people you really trust and understand what they're saying, not some of these YOLOers. And, you know, I'm so done with that garbage, honestly. Look, you just have a thesis, you have a thought process, you put you put it together and you trade. And I haven't bought a word of what government said over the last 15 years, probably, yeah, since 2008, actually. Because I lived it. I lived GFC. And they were still saying things are great. All the way to the depression almost we went into, the housing crisis. Oh, everything is great. I'm like, they were still saying the same thing. Everything is great in the dot-com bubble. I lived through all of this. So I have history on my side. I have experience on my side. Some of you probably are so new to these markets that you only think stonks go up. Yeah, stonks go up on long periods of time, but there are periods that stonks get smashed, and then your account's going to get smashed. So you need to learn. Yeah, we'll see. We'll see what happens. Let's see. Let's see what's going on. Charts. Yeah. Oh, now we're taking a nice big leg down. There we go. Yeah, they trade that. So the question is now, is the market going to price in a slowdown? That's why Fed's cutting aggressively. And are we going to sell off 10% here? That's the question of the day, of the year. Yeah, one of my positions is getting smashed. Okay, we'll either add to it or we'll take the loss and get the heck out of Dodge on that. PC, put debit spreads are helping a little bit, but not as much as I thought. Yeah, we don't want to do anything. We just want to let the dust settle. I have a buy list that at some point I will interact with. One is AMD. Just, HIMS, I don't want to touch. Some of the other nosebleeds like Oklo and things, I think they all should be shorted. I'll start shorting some names. Yeah. You know, a lot of YOLOers, a lot of stocks to the moon. I don't know, man. I said it to my members, and I said it before the show started, before the Fed decision. The market's going to decide tomorrow, next day, how it treats this aggressive rate cutting cycle. Are they going to say, wait a minute, the economy is really in the toilet, huh? Is that why you guys are cutting rates? And if that's the case, the market's extremely, extremely overvalued. Extremely. And I'm talking a lot. So here we go. We're rolling over. Yeah, on any rally now, I will start buying some puts or some hedges. Not only that, I won't even do put debit spreads. I'll just go straight up, buy some puts. Start shorting some names that I think are just ridiculously overpriced. And we'll survive this one too. And we'll end up making money on the downside maybe. Yeah, that's what we'll do. No panic here. No panicking here. Yeah, we're selling off hard. Okay, cool. Cool. Yeah, I'm taking it. Yeah, we're down here now. So we were at 6,600, rallied to 66.25, came down to 65.80, rallied up to 66.10, and now we're down to 65.60. Let's see where my UPRO shorts are. We're down to 106. Maybe we'll be in the money today on the long end of the put debit spread. We're selling off hard. What do I short here? We're early in the game. What do I short here? Do I short TQQQ? SQQQ. What happened to buying SQQQ? I think we can buy SQQQ if we're going to really do a number here. We'll figure that out. No rush. In fact, I'm going to add a touch to my call debit spread. Let's leg it in. Let's do 10 more. Oh, paid 94. Okay, what can we sell it for? 94.22 maybe. Let's see if we can sell 22 or 23. 23 is good. Yep, did that. So we did it at 71 cents. That's all good. So we added 20 to that, which is good. I don't want to sell any more puts. I want to be 2-to-1. I want to do this PCS. Where are we? 245 on the ads. It's 125. I need 125 out of it. I don't want to do it. Where are my PCSs? Actually, put debit spreads are above up 1,500, so it's keeping a little pace with what's going on. I want to add to my put credit spread on SBAT for January. 119. I don't want to do 119. I'll do 125 though. I'll negotiate with you. No, not 124. 125. Okay. I'll do 125. I'll take in 125. I want to add to SMLR actually at some point. Yeah, that's where we are, folks. Now we bottomed on SPX. We bottom and rallying a little bit. Yeah, there we go. So we bottom at 65.60. We're already at 65.80. So this rally should be sold, or puts should be bought, or shorted some stocks. SQQQ. Yeah, I think I'm going to buy some shares of SQQQ, or we're going to buy some options on that. Let's go to October. Where are they? Well, IV crash is going to happen too, by the way. So we can buy some October. Where is the index at? 16.5. 16s are $110. 92 low, 125 high. I think I'm going to buy some of those. A little bit more hedge. Just a little bit more hedging. Okay. Okay. Let's see. Let's see where Bitcoin and Ethereum are. BTC, where are we? Where are we? What are the odds we'll end up at 6,600 again today? I don't know. Coinbase, where is Bitcoin? There it is. Bitcoin 115.1. So we're getting a little bit of a sell-off. Ethereum 44.50. Is that why MSTR is selling off? Okay, that's fine. MSTR. I mean, honestly, I added to the call debit spread December's, by the way, December 5s and 10s. Yeah, I don't see much going on, man. Yeah, actually, the put debit spreads are up nicely. What else do I want to add? I don't want to add to anything. I want to let dust to settle. Anyway, so I don't want to be boring. That's it, folks. That's the show. So now we'll see what the market does tomorrow at the open and on OPEX. Doug says, wondering why RGT is running. We don't know. Is it running? I mean, it's been running. It broke out at 15, right? Didn't it? I think it did, right? All the quantum computing stocks have been doing well this week. RGTI. Yeah, anything that's up today means it's outperforming, obviously. Yeah, look at that. I mean, it broke out right here, Doug. This day right here, the earnings day actually. No, I don't know what day this was. There was some news, obviously. It broke out about like 13, 12 and a half, and then consolidated, and then next leg up. Where's SoundHound these days? Oh, yeah, it's kind of consolidating. Archer. Ooh, 884. I'd actually buy that. ARCX is the 2X ETF of that. Okay. Yeah, man. Just patience. 3 Ps, folks. If you don't learn anything here, you're going to learn that. Patience, position planning. Now we're going to the lows. Okay. We're testing the lows. I will add. It just won't give it to me. I have it at 125. I'll add 5 more PDSs. I mean, put credit spreads. Actually, the hedges are doing well. Hedges are up almost $2,000 now. I had 60, now down to 40. I should have kept it probably. But 40 is keeping pace a little bit. Like I said, that rally should have been sold. I got to start shorting some stocks. So I got to go focus last hour of the day. Thank you for joining. Come back on Friday for Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. It'll be more fun day that day. It'll be OPEX, quad witching, or triple witching. I don't know which it is this week. I think it's quad witching. Anyhow, well, thank you for keeping me company. I think I said that exactly at my members group this whole week. They said, what do you think is going to happen? I go, if they really cut aggressively or very dovish, and 3 cuts this year is very aggressive cutting, the market's going to figure out what the shape the economy is in. And please, in 7 minutes, I have a video dropping on my YouTube channel. If you're not subscribed, please subscribe. If you want to become a member, click join. Send me an email, sergio@sergioavedian.com. You get a lot of perks. In fact, you can join our members only live today at 4:30 Pacific, 4:30 Pacific. On Friday, Power Hour coming up, 10 a.m. Pacific, 1 p.m. Eastern. You all stay healthy, make some money. It's only markets. Markets will fluctuate. You just got to, hopefully you're on the right side. May all your shorts go down and all your longs go up. Please put a thumbs up if you enjoy it. Check out the YouTube channel. I think I put out really, really good info. And pay it forward. Information is power. Education is power. I'm here to do it. Thank you. See you guys on Friday at Power Hour.